volumes, both off-chain and on-chain. So the price is, let's say, from every venue that is available. And then at closing hours for a specific
All right, thank you for doing this, sir. I really appreciate it.
Of course.
To start with, can you please tell me your name and what you do?
Of course. I'm Marcin, co-founder of Redstone, which is the second largest and fastest growing blockchain oracle in the market right now. We protect over $10 billion of assets on chain. And Oracle is a system that delivers mainly price feeds, so price information, but also other types of data related to the market on the blockchains. We support Ethereum, Solana, Ton, right now over 110 chains, so it would take me a moment to name all of them. And we are used by top protocols in the industry, such as Morpho, Pendle, Spark, Compound, and altogether we have over 200 clients. And I'm extremely bullish on the whole DeFi tokenization crypto, so very glad to be over here. Thank you for the invitation.
All right, great. So we'll get to Redstone and what it does, but first, could you give me a little background about yourself?
Of course.
What was the path that took you to what you're doing now?
Yeah, so I graduated quantitative methods in economics. So my background is statistics, econometrics, math, not necessarily coding. In 2017, I was writing my bachelor thesis and I chose blockchain technology, Ethereum, and related aspects as the major topic. That gave me really strong fundamentals early on about consensus mechanism, gas, and many other like wallets aspects of the crypto industry. Then I worked in a crypto startup. I didn't get 3 months of a salary because it blew up. So that was my first job. It was pretty harsh. So hard beginnings, but thankfully I stayed in the ecosystem. Then I worked in Google Cloud that allowed me to understand distributed systems very well. And in 2020, together with Jakub Wojciechowski, who is the technical founder of Redstone, we started the journey with Redstone. And yeah, now we're here.
Yeah. Classic crypto introduction, though. I love it. Okay, so yes, you briefly introduced Redstone, but let's take it in pieces. Redstone is primarily an oracle.
Yep.
What is that in 5-year-old language? What does that mean?
That's a good question. So blockchains natively do not communicate with real world. You have blockchain of Bitcoin, Ethereum, Solana, and so on. Not only they don't communicate between each other, but they also don't communicate with the outside world. So in order to use some information from regular, Singapore internet in general, you need an adapter that's going to deliver that information. And Oracles is that infrastructure that delivers the data for smart contracts to execute mainly. So Ethereum is the biggest beneficiary of Oracles. And then we have, of course, Solana, Sui, Aptos, and Avalanche, and so on and so on. As Redstone, we focus primarily on price feeds. So when the price of an asset, for example, Bitcoin, goes through 150K, the smart contract should execute a specific logic. Oracles are used by DeFi markets, especially lending, like Aave, Compound, Morpho, but also perpetual protocols like Hyperliquid, GMX, and so on. And essentially, the whole DeFi is based on Oracle accuracy at large.
I love this thing that you said, adapter. I've never heard this analogy, but I think it's perfect, right? Yeah. An adapter between like the real world and the on-chain world.
Exactly.
That's amazing. I love that. So I guess the first question that pretty much everyone is asking is, how are you different than your competitors?
Oh yeah, a classic one, right? The biggest oracle right now is Chainlink, and they've been around for many, many years. The major difference is the architecture.
Okay.
Chainlink was designed in 2018 with fairly monolithic architecture that is heavy. So the instances that are on plenty of networks do not share resources between each other, which in our view is unscalable. Therefore, in 2020, when Jakub, the technical founder, won ETH New York City hackathon with an idea of interest rate swaps, he went to Chainlink asking about delivering those interest rate like software and other on-chain. And then Chainlink struggled to deliver that for months. So he asked himself, hey, what's the problem? Like, what's the crux of the issue over here?
Yeah.
And it turned out that the implementation of a new asset for Chainlink is fairly costly and also lengthy in terms of the time. So he designed Redstone to be a modular oracle, the first modular oracle. What it means is that he divided the architecture into 4 modules, and 3 out of 4 modules are shared across all the networks that we support. So in simple terms, you can think that Chainlink has to redeploy heavy infra on any new network that they support. And in our case, it's just more lightweight and scalable, as we are going to go into thousands of blockchains, millions of tokenized assets, and essentially like infinite number of dApps on chain.
Okay, so Chainlink's architecture is less able to go to new chains and new assets within a chain, basically.
Yeah, it's more costly and time consuming, and the complexity of their system increases with every new network that they support heavily. And we, from the get-go, were created to be able to support hundreds of assets, hundreds of thousands of assets, thousands of chains, and so on. So it's just the design principles with which you start an infrastructure. Those are really important, because later it's very hard to change that as you're running already the shop.
Right. Okay. Does Chainlink know about this problem? Are they?
Yes. Of course. I mean, look, it's not that Chainlink is going to die or something, right? No, like, in my opinion, they're an extremely important piece of the whole DeFi puzzle, and I respect their team a lot for helping to bring like DeFi to where we are in general over here in 2020 DeFi summer. But there you need more diversity, right? Like there cannot be single point of failure in our industry. That's for one, and for two, they focus on those use cases they already gathered, and new ones they select very carefully because they have limited resources in that sense. And we are just more nimble and effective player that has technical excellence. So I can also tell you on statistics, Redstone is right now 46 people.
Okay.
And 31 are technical people.
Nice.
So there's a very high ratio of engineering talent so that we can deliver innovation at a fast pace.
Nice. Gotcha. All right, so let me ask some questions about oracles in general, because I find this topic fascinating. What are the biggest challenges in general about having an oracle? For example, I imagine things like mispricing events, or maybe front running, like people trying to front run data like that.
Yeah, that's a very valid question. So the most metric on which you measure an oracle is reliability.
Oh, okay. Wow.
Why? Because if an oracle is wrong, then a lot of damage can be done. So as I mentioned, Redstone protects right now $10 billion on chain. So that means if we were to blow up tomorrow and stop existing, $10 billion would be at risk. It doesn't mean that everything is going to be stolen, but they are at risk, right? For someone to do some malicious action. So an oracle delivers the data on chain, and there are 2 things that are important. One is the speed of delivery. So if the price changes, like how quickly you deliver that data on chain. So if you are wrong by 0.5% or 1% or 10%. And the second option is mispricing. So the real price in the market, let's say, is around, right now for Bitcoin, it's $115,000. And imagine an oracle reports on chain $60,000 because of some glitch. Such an update would trigger a lot of smart contracts to execute their logic, because they are just waiting for an oracle to do this update. Some of the liquidation threshold would be hit, because imagine you use Bitcoin as a collateral to borrow against USDC. Imagine like this.
Yeah.
And right now the value of one Bitcoin is $115,000, and an oracle updates just one update of $60,000. It means on chain a smart contract believes that the Bitcoin that is as collateral is worth way less. So it allows liquidators to close the position, liquidate that, and then a person that was actually holding the position is unrightfully liquidated. And the beautiful thing about Redstone, and I hope, keep my fingers crossed, we keep that, is we've never had a single price manipulation on downtime, which means we are the only major oracle that has never ever experienced such occurrence, which positions us very well in this race in general. Like Chainlink and other competitors did have smaller hiccups, nothing major, nothing like that blew up like enormously. But yeah, like 100% reliability is not easy to keep track on, and I hope we are going to continue to do so.
You mentioned that maybe some of your competitors have had hiccups. Why does that happen? And then why haven't you had any of these problems?
Yeah, so for the audience to understand, it's really important that Oracle is an infrastructure business that is targeted for developers. As a user, you don't directly interact with an Oracle. It's rather the protocol you are using. Imagine Compound, Morpho, Euler, and so on, Spark.
Okay, yeah.
When you're using it, then you're using Oracle indirectly, like an Oracle is protecting that system. So our motto is by builders for builders. So we are engineers at heart ourselves, and we know engineers on the other side are going to introduce that product in their systems. So we have the principle of always listening to the developers. Like naturally, there are business people that have like some business goals, but we need to understand first what is the fundamental value an engineer wants to get from what we are delivering. This is the most important one. And we put a lot of time and effort to ensure we have a couple of layers of redundancy. So imagine we deliver a single price feed. We usually have 3 layers of redundancy. And actually the 4th one would be a human being like clicking send transaction. So you can imagine like a defense system. Like if the first goes down, then you default to the second one, then to the third, and then to the 4th one. And in our architecture, we never touched even the 3rd one. And we always run it just in case like something really bad happens, because we know that, a lot of money is at stake. So we need to make sure that everything is very, very accurate.
And these defense systems, I'm just trying to get a picture in mind. So using your example of the price of Bitcoin is 115K.
Yeah.
Maybe the Oracle, for whatever reason, interprets it at 60K.
Yep.
How does that move down this defensive stack, right? So let's say it goes into the first part. It says, "Oh, 60K is the price." How are you checking to see if this is wrong or not? Is there oh, this is more than 5% difference than the last tick?
Yeah, so the exact methodology I cannot share because, then someone's going to game it. But roughly, yes, we do measure, let's say, the historical price changes, and we observe the new price changes. And if it's very much outside of the bound, so imagine last update was 115, and the next one that we are in theory supposed to do is like 60. Our AI system actually right now is detecting that and then analyzing if that would be actually like a correct price, and then runs like an additional analysis before the price is updated. But even more important, I was talking about redundancy in delivery. So imagine the price was 115 and actually it did move to 120. So it did move like in reality. Then you have the service, an Oracle that delivers price on chain. Let's imagine like an Oracle throwing it on chain. And imagine for whatever reason, because of AWS server or Google Cloud server outrage, this first layer does not shoot. Then we have the second layer that is not correlated with the first layer that is going to do the job. And if for whatever reason there was this very unlikely event of both of them failing at the same time, we always have the third one, and then the 4th one is a human being, right? So it's about making sure that even if the systems like collapse like one by one, there's always like a backup option to deliver it.
Very, very cool. Yeah, that's awesome. Just as a side tangent, while we're talking about this, it does seem like, again, this is not connected to like oracles in particular, but it does seem like when I look at like past exploits or problems for on-chain exchanges like Hyperliquid, for example, there are some problems with like the people exploiting how the Oracle posts things like Jelly and things of that nature. Is that mostly because of how Hyperliquid implemented their personal Oracle, basically, or because at that time they weren't pooling all the prices from multiple exchanges. It was just their own internal price.
Yeah, so Hyperliquid is an interesting case. In Hyperliquid core, so the major perp market, you have this internal Oracle that is delivering the price feeds. And then you also have Hyper EVM, which is layer 1 blockchain EVM compatible, where Redstone is the main Oracle.
Okay.
But it's for the EVM, like the chain. You're talking right now about the core.
Yes.
And with Jelly, what happened was Jelly was like a meme coin, so fairly low market cap. And there was a person in March of this year that was trying to manipulate the market by as far as I remember correctly, creating a very large short position and many small long positions.
And they also controlled they controlled like a majority of the supply. So
Yeah.
they had been buying the supply for a long time. So then they could do whatever they want with the price.
Exactly. And over there, not the Oracle was a problem. It was rather parameters like what kind of asset can be used for perps in general, because you have to think it that way. When you have Bitcoin, ETH, Sol, so the major assets, and you create perpetual contracts on top, there is a lot of volume on spot and liquidity in general to back up the perpetual market in general, and the market cap is large. With Jelly Jelly, that was like a meme coin. So the market cap inherently was small, and then you add perp on top. So you can imagine that there is a fire already, like, burning, and then put petrol on it. So, it blows up very much. So it's rather the question to Hyperliquid, like whether that kind of an asset should be allowed to be traded with perps with such a leverage or not, right? And the moment the hack, it wasn't actually a hack. It was more exploit. It was even more like a manipulation, I would call it. When the manipulation was happening, then Hyperliquid decided to sort of like roll back the price to the original one so that they protect the users. And there's the question, like, was it good or bad? And there's no like one definite answer. As with oracles, there is not. Like usually it's like how the system is designed to perform. For Hyperliquid, the most important was to protect their users. So that's the reason they decided to do that way. In our case, there are going to be HIP-free markets with Hyperliquid. Those are permissionless markets that anyone can spin up as long as you have enough stake of Hype. And then you can decide which oracle is going to be used in those markets. And Redstone is going to be the major oracle to provide such a service. So right now we talk with Ethena, USDH, which is the native Hyperliquid dollar that was recently like announced over there, and many Felix, many other protocols. So we are going to support them in creating those new perps markets. And we will be also helping them to decide on those parameters like, leverage and like which kind of, tokens to choose. I'm not extremely bullish on perps on meme coins because meme coin itself is already volatile. I'm really bullish on perps on middle tail. So imagine on CoinMarketCap, assets that are between number 30 to 100. Let's call it on market cap. I would call it like middle tail, not like blue chip, but also not long tail. And also I'm extremely bullish on stocks. The moment we create on Hyperliquid or any other platform, but I believe on Hyperliquid is going to be first, like at scale trading perps with stocks, we won. Because ultimately the trading on chain is going to be more effective. It's going to be 24-hour. It's going to have a lot of liquidity, and it's going to be extremely effective in terms of like the fees and the brokers and whatsoever. So this is like the future that I envision very, very shortly.
Awesome. Okay. I have a couple questions now that hopefully won't be too boring for the audience, but, I think one of the things that, Hyperliquid ended up doing to kind of address this jelly situation and maybe one other situation that they had, which was the Oracle checked the price of other markets, because that would have also, been able to fix the jelly situation, because jelly didn't spike on any of the other markets like Binance's and stuff like that. I'm assuming that Redstone does that too, like to determine the kind of what the actual price is of something, right? Like you have to kind of, I guess, query multiple markets to see kind of what you call the definitive price. Is that correct?
Yes. Right now we use over 300 sources, and many times we deliver a median. The reason is median is imperfect in accuracy, so it's not super accurate, but it's really hard to skew, because for an attacker to skew a median, they would need to like go one by one by markets, right? So median is always this middle value from many of the sources. Specifically about JDJ, that was not an easy situation because, there were not that many markets that was listing that.
Yeah.
And funny enough, when the whole manipulation was happening, Binance, I believe, OKX and Bybit like introduced trading of that.
Yeah.
So also the price was changing, right? Because then you have this very philosophical question, what is price?
Yeah, exactly.
And we could go like, for a 20-hour journey and talking about what the price is. But from our perspective as an Oracle, it's really important to understand what is the volume or liquidity on chain of a specific asset and how to create something that is robust. So if it was for Redstone, at least today, we would not allow to create JDJ market in the first place.
Oh, interesting.
So we would say, hey, this is just too dangerous to create. I mean, like the gain to risk ratio was not there. Like there were not that many people that were interested in that market because it was small anyway. And there was a lot of risks involved that did happen in the end, right? So we would be saying more like, hey, this asset is fairly small. Let's move to something that is a bit bigger, that is a bit safer. And then if the safer asset turns out to work well, then we can go to the more dangerous one. So we are always taking a very step-by-step approach that wouldn't allow the users to burn their fingers in a sense.
Yeah, that makes a lot of sense to me. And then the second question, you mentioned getting stocks, like equities on chain. Now, the thing that this immediately brings up to mind is equities only trade in like a very small window of time, right? Like so that would be like the genuine price discovery is when they would trade like on regular markets. How would an Oracle price those things during those off hours, right? So like it would be like US hours from like what 9:30 to 4:35 p.m. But then there would be like this giant window where the price could presumably move a lot, and then it would have to fall back into reality the following trading day. Right? That seems like a very difficult problem to address.
That's $1 billion question, I can tell you. And that's a question that we are working on right now. So the reason you don't have stocks trading on chain at large yet is mainly because of that. And the second one is regulation. Of course, like everyone wants to make things that are according to the law. But this is a really tough problem because then at the moments of intersection when you're opening the market off chain or closing, there's going to be plenty of arbitrageurs and there's going to be a lot of anomalies that are going to happen, right? So what we are discussing right now with teams is to create an oracle that when the opening hours are trading, we aggregate from all of the venues, both off-chain and on-chain. So the price is, let's say, from every venue that is available. And then at closing hours for a specific stock, right? Because Tesla stock and let's say Chinese car manufacturer stock are going to trade in different hours, right? Because, Chinese market and US market is open in different moments. When the market is closed, we would default to only on-chain trading volume, but we would also wait probably the closing price of an asset when it closes. And now it boils down to the methodology. So right now what we are doing with our partners is to simulate like, okay, imagine this is what we are going to do, what's going to happen, what is going to be the impact and whatsoever. And that's the reason I don't envision stocks to come at large on chain in months. I'd rather count it in quarters to ensure it's secure, right? Because the last thing we want to do is to repeat the jelly situation, but with stocks.
That does seem like very, very cool though.
But I can also tell you that in our model, like Redstone, we have data providers in general. And in order to be a data provider, you need to stake a Red token, which is a token of our ecosystem. And whenever they provide the data, they also accrue value from the users of Redstone, right? So when we are going to go into the stocks markets, we are going to also have like specialized data providers that are very proficient in stocks so that the accuracy of the data matches the requirements from the on-chain venues.
And presumably, they can be slashed for things.
Exactly. The moment they deliver bad data, they can be slashed. So part of their stake is going to go to the damaged parties, if there's any, in a sense, insurance, you can call it. But the whole economy would work that way. And interestingly, recently we also acquired a business. We recently announced acquiring Credora Network, which is the biggest DeFi ratings platform. And the reason it matters is for ratings to be efficient, you need an engine, a methodology, which Credora has, like a quant methodology. And you also need the data in order to fuel that engine with information. And we have the data as an Oracle. So it's like a perfect match. Ratings, for those that are not familiar, is a way to assess a risk associated with a specific either asset or DeFi strategy. So you can imagine a MorphoVault of Ethena SUSDE looping that is operated, for example, by Gauntlet. We would rate that strategy. Imagine it yields, let's call it 10%. And then we would look into composition of the assets, the counterparty risk, and many other risks in our engine. And we would give it a rating. Let's call it between D and A. So it can be A minus, A plus, B plus. we are creating that for the retail users, so for all the listeners, so that when they go into Morpho, Euler, Camino, and any other lending market, they are looking not only on the yield, but they also get an information about risk associated. Because if one vault is going to yield, let's call it 12%, but it's going to be C plus, and the other one is going to yield 9%, but it's going to be A minus, we already interviewed some of the users. Many of them are going to go into A minus because they're afraid of losing money. And I really wish we had such a concept as Credora we're doing right now when Terra Luna had happened, because UST fundamentally was broken. Like the model was flawed, and the rating from our methodology would give it like fairly low rating. I cannot tell you right now because we didn't do it, right? Because it's not existing right now. But I would assume it would be probably like something like C plus or maybe B minus, which would signal to the general user like, hey, it works for now, but there is a high chance it can blow up at one point. And this would happen. A lot of people lost money, even though on chain, they, for example, hold it UST on Anchor for 2 years. They were happy with, let's call it 40% yield for 2 years. But then at the end of the day, it depegged, so you have zero. So this is very painful for a user to lose all of the money. And with the reason we are doing Credora is to fight against those kind of models that are actually fundamentally wrong, but people don't have enough information to assess it. And we as specialists can do that.
Very, very cool. So kind of like an on-chain Moody's or something like that, right?
Exactly. But Moody's and S&P, they rather rate an asset.
Yeah.
And we focus even more on the strategy because we want to do it for the people. Like people, when they use DeFi on chain and assets on chain, many times they can invest in an asset. Let's call it tokenized T-bill or Bitcoin or ETH. But what they do next, they majority of the time go into a vault or a DeFi lending protocol, and then they do a strategy over there. So we want to rate those strategies first, assets as well, but the strategies are even more important for the retail. And we want to create a standard so that later when they see, for example, 4 vaults, 3 are rated and 1 is not rated, that they put pressure on the issuer that, hey, we want rating. We want to understand what is the underlying risk related to this strategy, right? And this is what we want to create, like a unified standard for risk rating in DeFi, Credora by Redstone.
You're gonna make some people unhappy with that, I think, in crypto.
Well,
which is good. It's a good thing.
Yeah.
But yeah, I can imagine some angry emails are coming your way.
No, the good thing is going to be we will inform the rated party that if they are going to score low, what is the reason? So we are not going to open the whole methodology because then it can be manipulated a bit. But we're going to inform them, for example, hey, you got a B plus, and the main reason is this vertical. And imagine it's going to be transparency of assets. So maybe you should do more transparency, or maybe it's liquidity on dexes. So you should improve liquidity. So they will also know like how to improve. And the byproduct of that is that everyone from us is going to benefit because they are going to be incentivized to improve in order to get better rating at the end of the day.
Yeah. I mean, I think it's a great product and I look forward to it. Okay. Let me ask you about AI, crypto and AI. It's waned a little bit, but it's still very prevalent. I expect to see a lot of it at, on the conference floor. In KBW, it was AI everything. In any case, I was wondering, where do oracles fit in with this like crypto AI thing?
Brilliant question. First, we are already using AI as Redstone for anomaly detection. So AI is very good with large sets of, data sets and, to understand something that human eye cannot catch in general, but it tends to hallucinate as well. So I wouldn't imagine quickly an oracle that is going to be based only on AI. So imagine an AI would update the price on chain. And I told you reliability is extremely important. So it doesn't matter that the AI would deliver the good price 364 days a year. This one day it's going to hallucinate. It's going to do a lot of damage.
Yeah.
That's the reason we don't incorporate AI in the oracle itself, rather in our methodology, so that we can work with that. Then the second angle is the price data for AI models. If you're going to ask ChatGPT about what's the price of Solana right now or Bitcoin, many times you're going to get a wrong answer.
Yes.
It is going to tell you yesterday's price, or it's going to just hallucinate. And this is the problem with AI as well. They don't know, they hardly ever admit being wrong.
Yes.
They don't tell you, I don't know. They tell you a wrong answer. And then you say, hey, this is wrong. Oh yeah, actually, you're right.
Oh, you're right. That's wrong. Yeah. Or I've had it give me the price from 1 year before on the same day, right? Like, so what's the price today? And it gives me the price 2024.
Yeah, exactly. So in order for AI models to have very accurate pricing information and create really strong AI agents for financial use cases, you require high fidelity of the data. And right now, I cannot reveal the names, but we are working with some of the AI projects that are doing stuff in this financial sector to feed them the data that is constructed for those models, because it's usually in a bit of a particular sense in terms of the delivery of the data, right? So it's not like as you can just query an API, it has to be delivered in a specific way. So this is the second angle. And the third angle that is very interesting is related to prediction markets. So, prediction markets, the biggest one is Polymarket and Kalshi. Those two are like fighting right now for market share in general. And AI is going to support a lot the decisions on which prediction to do, like which prediction to bet on in a sense. And prediction markets at large are going to be very interesting because you can speculate on anything with that, right?
That's right, yeah.
But I can tell you a very interesting case. Recently, I read about farmers in South America that are trading on prediction markets about hurricanes, not because they are gamblers, but there is no insurance company that wants to issue insurance for them.
Interesting.
But they buy, for example, long that the hurricane is going to come. So if the hurricane comes, they are going to get a payout from this prediction market, and they treat it in a sense like a hedge, like insurance.
Insurance. Yeah.
So, and I believe prediction markets ultimately are going to do a lot of those kind of solutions that we don't even are aware that are possible today, but people are going to figure it out because it gives you a lot of flexibility. And as Redstone, right now we are discussing deeply with Kalshi, like collaboration aspects and how to bring it even more into crypto and DeFi and on-chain users.
That's a fascinating thing. I wonder how oracles are going to play a role with prediction markets in general too, because so much of it is, I think, done manually at this moment. And I don't think that's scalable for a lot of this.
Yeah, I believe there are going to be the two major buckets. The first one are going to be binary markets. So who won elections in the United States?
Yeah.
Or something that is, or who won the match, right?
Yeah.
Those are fairly easy to resolve. And over there, I do believe we're going to see more zero knowledge proofs. And we are already working with some of the companies to deliver such solutions. Because over there, you just need to make sure that the math is used for verifying that this is the truth from the real world, right? And then you are going to have those more subjective markets, such as did Zelensky wear a suit? I'm not sure if you remember that one.
I do remember that.
Was it a suit or it was not a suit? And then the guys were DMing a fashion like guy that created the clothing.
Yeah.
And he answered, yes, it is a suit, right? So then he was the oracle for, in the sense of that market.
Oh, that's great.
And those are hard questions, like how to measure those. We as Redstone, I'll be honest, we mainly focus on those either binary or price oracles, because the second category is very, very hard to design, at least at the moment.
Yeah. All right. Well, you've been very generous with your time. Thank you so much. I have more questions, but I'm going to leave it there for now. I really appreciate it.
Thank you very much. For anyone who's interested, I am very active on Twitter, Marcin Redstone, and Redstone itself is growing very fast. Recently, we got listed on Upbit in Korean exchange. We work with BlackRock, Apollo, and many other TradFi companies to help with tokenized market funds and so on. And I'm a big believer in crypto and on-chain finance. Stablecoins are 300 billion right now. And my bold prediction is that by end of the year, it's going to cross $500 billion. So 500 billion is going to be what stablecoins are going to be present on chain. You're going to see it's going to happen.
That is awesome. Because you said that, I have to ask one more question.
Go ahead.
It's okay. That's great. I just wanted to hear your thoughts on, like just in the past couple of weeks, there have been a lot of like L1s that have come out that are focused on specifically on stablecoin payments and infrastructure. You had Tempo being announced. Plasma had their kind of widely kind of celebrated launch this past week. Google has said that they're going to release an infrastructure L1 focused and Stable. They had their big debut at KBW last week, which again is stablecoin focused. Gas is paid in USDT. I was wondering for these kind of like stablecoin focused chains, What role are oracles in these chains? Do they have an important role, or is it not as important in these kind of like stablecoin focused L1s?
Yeah, I would say it's crucial. And that way, we are going to be on all of those chains as Redstone, because again, we are the nimble oracle. We were live on Plasma day one, on the day of launch. We are already discussing like with, Arc, which is the L1 from Circle, Tempo, the Stripe one, Stable, as you mentioned, and there are plenty of others that are not announced, but we already plugged into the conversation. We are going to support all of them. One, if they want to have any DeFi component like yield or vaults or lending, they need an oracle. So that's where we come in as a enabler. But the second is going to be those credit ratings, because with a lot of payment solutions, you're going to have things such as refactoring or buy now, pay later, or many other aspects. And sometimes you will also be needed to do a credit rating of a specific counterparty, an example. So we started with Credora doing DeFi ratings, but in the future, we'll expand into proper like credit rating, similar to S&P, Moody's, and whatsoever. So we are already discussing those kind of use cases, and we are very, very bullish on the stablecoin L1s. And I do believe stablecoins is going to be this one solution that is going to bring crypto to masses. They will not recognize they're using crypto. It's going to be abstracted away. But this is this one revolution that will make sure that everyone who is using Revolut, Robinhood, Prix in Brazil, or any other fintech application is going to use also like crypto underneath. And another bold prediction I have is in 5 years, every fintech company is going to be a crypto company as well. So they will just need to embrace this architecture.
You heard it here. The man would know better too, because he's already kind of in the weeds in these chains. So 500 trillion in 5 years, crypto everywhere for fintech. Thank you very much, sir. I appreciate it.
Thank you very much for inviting me. Cheers.
Okay, we are back with our live coverage of Token2049 from Singapore. I am at the Bitcoin.com news desk on the conference floor, powered by Threshold Network. I am with Hunter Horsley, the co-founder and CEO of Bitwise Asset Management. Did I get that right?
You got it right. Perfect.
All right. This Bitwise manages billions in crypto assets. And I would dare say has acted as a very important bridge between traditional finance and crypto. Especially after our last conversation, which was in May at the Bitcoin conference in Las Vegas. This was a great conversation.
Yeah.
Check it out. If you check it out, it was a good one. That really did show, I already kind of knew Bitwise was important, but just from our conversation, you really did have helped bring traditional finance, I think, closer to crypto. So thank you for your service.
Thank you. I appreciate that. Yeah, always love seeing you. Fun to see you here as well.
And like I said off camera before we started, look at how this guy dresses. Emulate.
Thank you. Thank you.
Okay. So, let me just set the conversation for you. From the news side, there have been like three major narratives this year. I would say the DATs, digital asset treasuries, basically starting with Bitcoin, and then it's kind of blossomed from there.
Yeah.
There's been stable coins, of course.
Right.
That's all I've heard for the past month.
Yeah.
From WebEx to Bitcoin Asia to Korea Blockchain Week, and here, stablecoins. And then the third, which is like, I would say the most crypto native one, would be like revenue-based projects.
Yeah.
Right? Like projects that make money.
Right.
Crypto projects that make money.
Yeah.
And we're going to go through some questions that will kind of go through,
Sure.
through all of that.
Great.
Yeah. So to start with, let's start with DATs. Last time we spoke, you described the ETFs as a bridge, like a financial bridge,
Yeah.
from traditional finance to crypto.
Yep.
I really, really like that metaphor, analogy, however you want to do it. But then since then, the DATs as a kind of meta really exploded. That was only 5 months.
Yeah.
Yeah. So if we were to stick with this metaphor, where are DATs? Are they another bridge?
Yeah.
Smaller bridge? Bigger bridge?
Maybe they're a ferry. Another bridge. Absolutely. Yeah. I think DATs have. It's been remarkable. You know, one of the things that I think is so extraordinary about this space is how emergent it is. You know, you couldn't have predicted in 2024 the importance of DATs this year, but certainly they've become one of the most important things. And I mean, we could talk more about them, but I think they're absolutely building additional bridges for capital markets to participate in the space, and I think it's a fantastic thing.
Yeah, I mean, just looking back to the last time we talked, nobody used the word DAT really.
Yeah,
right?
You're right.
It was Bitcoin treasuries. CTCs.
It's like 2-month-old jargon.
I know.
It's like fresh, hot off the press.
Next time we speak, it'll be like, oh God, are they still talking about DAT?
Yeah, right.
Boomers. So where do you put DATs in importance, like next to ETFs, like spot ETFs?
I think that they're siblings. They're really important. I think they're more important in some ways, different in some ways. So
take me through that.
Yeah, I think that DATs bring three really valuable things to the space. The first is, I'll give an example of the first.
Good.
We were chatting with a sovereign wealth fund. They want exposure to Bitcoin. It's going to take them 6 months or so to get in a place where they can use the ETFs or Bitcoin. So they bought MicroStrategy. That's easy enough. They buy all sorts of equities. I'm friends with a portfolio manager of a very large equity mutual fund. He has a very constructive conviction on Bitcoin, but it's an equity mutual fund. Its mandate doesn't allow it to hold digital commodities. So he owns MetaPlanet and MicroStrategy. So I think one part of what DATs are really contributing is a bridge to people for whom buying a stock an equity is simpler
Yeah.
in a variety of ways. So I think that's great. I think a second thing that's really constructive about the DATs is one of the great challenges of this space, and you probably know this better than anyone else because you speak with so many people in this space, is understanding what this space is and what's going on. It's so confusing to many investors. And I think that there's a way in which the DATs have empowered some spokespeople to tell the stories of different ecosystems to the broad investing public. So
Speaking about like Michael Saylor, Tom Lee, or
exactly. Andrew Keys, Joe Lubin. Yeah, absolutely. Kyle Samani, great example. So I think that that's really constructive. It seems so obvious, but in the same way that people look to Jensen Huang to understand NVIDIA, or they look to Satya Nadella to understand Microsoft, they've been needing a voice to turn to understand these ecosystems. And I think that's the second thing that's really constructive. And then the third, and sorry for the longest winded answers I've ever heard, but I think that the DATs also can serve to be power users of the underlying ecosystem. So if you're Solana and you're building an application on Solana, well, maybe Ford Industries could be your first and savviest user because they have a 1.6 billion of Solana and they have the ability to do things on chain. So I think it's endowing a lot of ecosystems with a potential power user, which I think is really great for the development of those ecosystems. It's bringing a voice to the investing public, which I think is really great for people building an understanding of the space. And then it's providing another bridge for certain types of investors and accounts that an equity is easier than an ETF, and I think that's great too. So that doesn't mean everything will work, but I think there's real value to DATs, and so I'm really glad that they're here.
Yeah. I have to say, and I've admitted this on Token Narratives, like by your podcast and everything, I was really, really skeptical on DATs just because like earlier this year, every week I'd be like, so a lingerie fighting league just became a DAT.
Right.
No, I mean, that's a real story.
Yeah, I believe it.
But I mean, it felt a little highly speculative.
Yes.
But I've talked more to people like yourself, and they've convinced me that DATs are here, and they're going to be like net positive.
Yeah, I think so.
If they have like good stewards.
Yes.
As we're speaking about.
Right. Totally. And I don't think all of them will have the same journey.
Yes. It's a very polite way of putting a lot of them are going to fail, burn and fail. Okay. So, do you have any feeling about like, I would classify DATs as like passive DATs, like Bitcoin DATs tend to be more passive. I would say it's just like buy Bitcoin at whatever price, and just never sell. Yeah. Versus I feel like Tom Lee and Kyle are trying to be much more actively managed, right? As you say, they're saying that we're going to buy at opportune times. Yeah. And we're going to take an active leading role. Yeah. Developing out the ecosystem itself. Yeah. Why do you have any thoughts on this? Like, but there seems to be like a bifurcation between like Bitcoin and.
Well, I think it's the nature of the underlying ecosystem. So in Ethereum, you have Bitmine, Ether Machine, ETHZilla. I think all of them have discussed doing things on chain. I think ETHZilla has actually already put some of the Ethereum in a liquid staking token.
Oh, nice.
And deployed it in a vault. So, but of course, that's more unique to a chain like Ethereum or Solana than Bitcoin. Bitcoin, of course, there's a limited set of things to do, and that's intentional. So I think for the Ethereum treasury companies, it's a question of capital markets activity. I do think that you'll start to see other explorations in generating yield. So, for instance, for clients of Bitwise, a common strategy that will run for certain clients is if they have a lot of spot Bitcoin, we can write an options overlay on top of that Bitcoin. So we have a client that has $100 million of Bitcoin.
Use ETFs for that?
The options? No, actually, no. It's not ETF related. They have Bitcoin, $100 million Bitcoin. It's in cold storage. We then design with them an option strategy that fits their policy. Sorry, their risk preferences. and it can generate 7% yield annualized. We do the active management on a daily basis. They keep the assets in their qualified custodian. We can do it with listed options or derivative options or OTC options. But anyway, so we do that for private clients. And I wouldn't be surprised if some things like that start to show up in some of the Bitcoin treasury companies to generate yield on their holdings. But I think, as you said, the different ecosystems present different opportunities.
Yeah. So that was kind of ties into what my next question was going to be, which is how is Bitwise getting exposure to DApps?
Yeah.
Because I know how you're doing it through like the ETFs.
Yeah, totally.
We talked about before.
Yeah, so a few things. I think we talked about this last time, but we have an ETF. The ticker is OWNB or OWNB, which is an index of Bitcoin companies that hold over 1,000 Bitcoin on their balance sheet. That's one approach. We have options ETFs, tickers like IMST, IMRA, and others that write options on single asset exposures to generate income for investors. So that's in the ETF part of our business. But there are actually other non-ETF parts of our business. So in the staking part of our business, we stake billions of dollars of Ethereum for clients. And that could be asset managers, family offices, and where we are the node operator on their behalf. And then we help them with all of the reporting and compliance and nice. Tax and so on and so forth that they need. So there we've started doing that for some treasury companies.
Right.
They're unannounced as of now, but and in conversations with others. And that's one way in Ethereum or Solana and other ecosystems you can generate yield. And then, as mentioned, we can implement option strategies and other on-chain strategies to generate yield. So there are discussions there for treasury companies also. So it's a wide range of different things. And in general, the story with Bitwise, if there's something people are trying to solve in terms of their investment objectives, there are a lot of ways that we can be helpful.
Are you focused on any particular DAT ecosystem, or is it just all of it, all of the above?
Yeah, we don't have a specific focus. We chat with
Bitcoin, Ethereum,
Solana. There's Avalanche now. There's I believe Stablecoin X.
Yeah.
I believe there's one for Aptos, maybe Near. So, as discussed earlier, I think it's a constructive part of most ecosystems, and yeah.
So I have discussed this with a lot of, with my next question, with a lot of Bitcoin people. They're worried that as the ETFs and then now the DATs gobble up all the Bitcoin all over the world, and they've gone from like 0%, in the case of Bitcoin, from like 0% to like 12% of the total supply in like 18 months, which is incredible. And obviously it's only going to get higher.
Yeah.
So there's concern from Bitcoin maxis that these suit coiners are gonna start to like exert a bigger force or kind of sequester a lot of this Bitcoin.
Yep.
I had a guest on earlier that is like Bitcoin DeFi, on chain only.
Okay.
And the guest was like, "No, we're not worried," because he was confident that all of these institutions that are holding Bitcoin are going to eventually go seek yield on chain. And I was wondering if you had any thoughts on that. Do you think that's going to happen?
That institutions holding Bitcoin will seek yield on chain?
Yeah, like maybe in the Bitcoin ecosystem, burgeoning Bitcoin ecosystem, or maybe, I don't know, bridging to another ecosystem or something of that nature.
Yeah. I think, without, it depends on the specific institution that we're talking about. But I think in general, most investors would be interested in accessing yield on their assets. So I think doing things with people's Bitcoin is going to be more and more popular. I think another story that will be huge over the next 18 months is people borrowing against their Bitcoin. But definitely already today, there's a lot of interest in generating yield on people's Bitcoin. There have been a number of protocols that have explored staking Bitcoin, Babylon, CoreDAO, Stacks. I believe that there's a new one now. And then some people explore lending the Bitcoin to earn a yield. And as I mentioned, a growing solution for us is writing options to help people access income on their Bitcoin. So yeah, I think income on Bitcoin will be a growing trend.
Is it even in the realm of possibility that Bitcoin in like spot ETFs will be able to do this someday? Like just from a regulatory standpoint?
I think the existing spot ETFs, probably not. The ETFs are a very tightly wound rope, and you really can't mess with it and change it too much. So I don't think in the existing spot ETFs, but people could issue new ETFs that have additional features. In the US, there are some constraints, but I think people will experiment with that in the US.
Great. Okay, let's move on to stablecoins.
Stablecoins.
They're everywhere. I'm sick of talking about them, but I'm going to contribute to the den here. Stablecoins, right? Like when you have Scott Bessent come out and say 2 trillion stablecoins by 2030 as a conservative estimate, and then you have people like Arthur Hayes say no, 11 trillion.
Oh my God,
by 2028.
Were his fingers crossed though?
He also, the caveat is he also in the same speech said Hyperliquid is going to 128x from here, which is
right.
Probably not going to happen. But anyway, obviously there's going to be huge growth in stablecoins. I'm seeing just like this massive influx of L1s that are stablecoin focused, right? Stripe with Tempo. Yeah. Google has said that they're going to go in.
Great.
All right.
Everyone's got to have one.
Everyone's got to have one. How is Bitwise trying to be a part of this like exploding ecosystem industry opportunity?
Sure. Well, I think. So, what's the role of Bitwise?
Yeah,
there's a lot of different companies in the space. Bitwise's job is for investors they're smart, they're busy, they want to participate in the opportunity set. Maybe they want to generate income on their Bitcoin, or they want to stake their Ethereum or Solana, or they want to get access to alpha through a hedge fund strategy, or they want to invest in Bitcoin through an ETF. Our job is just to be a reliable partner that they like, that helps them understand what's going on and participate.
Yeah.
In the case of stablecoins, I would say right now the main thing is helping them access information about what's going on. I don't know that there's an investment strategy at this particular moment.
Yeah.
For us to facilitate for them. So we have clients who are connected to banks who are wondering if they should issue stablecoins, and we try to be helpful in making introductions for them or providing information for them to consider that. But so I'd say right now it's more, as far as the intersection with Bitwise, it's more about helping people understand this important development in the space versus a product that we provide.
Yeah. I mean, you also do a lot of research.
Yeah.
And I'm sure you do a lot of research on stablecoins.
Sure.
Do you guys have projections where you think this is going?
I think that
up, obviously, but
yeah. So stablecoins, I think we publish a quarterly guide to the crypto market. It's like 40 charts and tables with figures, and so I think that there's some figures in there, and people can find that on our website. I think that stablecoins. I don't think people realize that it's going to completely disrupt the financial services space. I think it's going to be a lot like e-commerce.
Okay.
If you think back to the introduction of e-commerce, you have some traditional retailers like Walmart who figured out e-commerce and capitalized on it. You had some new entrants like Shopify or Etsy, eBay, Amazon, figured out e-commerce and became new important constituents. And then you had some who didn't figure out e-commerce, like Borders or Toys R Us or Circuit City,
right,
and were left by the wayside. I think stablecoins are likely that order of magnitude in terms of a new dimension of financial services. And I think there'll be some new entrants. I think that there'll be some incumbents who really capitalize on it. I think there'll be some people who miss the boat. So I think it's a huge deal. And I think it's important. It's not just measured in sort of TVL of Tether or USDC, USAT now. But the way in which it changes the landscape of services available to people.
Yeah, I like that framework. Do you think like in that framework, you had a winner takes most though, right? Like I would say like Amazon is overwhelmingly the biggest player in that space. Do you see that also happening in the stable coins, or will it be a lot more dispersed?
Hard to say. I mean, right now, Tether is dominant. USDC is obviously doing incredibly well. I don't know. I mean, I would imagine that there will be several large stable coins, but I think you're about to see an explosion of, I think everyone's going to have a stable coins.
Yeah. The one interesting point about this is if and when interest rates come down. I mean, Trump seems dead set on getting interest rates down. That will start to have a material effect on these stablecoin issuers. I spoke with Paulo Arziano. I keep messing up his name. Anyway, I spoke with my pal Paulo, and when I asked him this question, he was like, "No, we're not bothered by it because we're the largest player in the way that we have our distribution. It'll hurt us, but it's going to hurt everyone else way, way, way more."
Sure.
And so I think maybe we might see like an explosion of stablecoins. And then if interest rates start to push down, and they push down more and more and more, you just see lots of the players not make it.
Yeah. There's all sorts of dynamics here. I think that's quite possible. It could lower the net interest income for the stablecoin issuers. But the other things to keep in mind are when rates come down, credit gets created, monetary supply increases, there are more dollars, therefore there could be more stablecoins.
That is true.
So, or people may be attracted to investing, changing their investment portfolios. They sell certain things, put it in stablecoins. So, I don't think it's a one-way dynamic, although definitely it does decrease the net interest income.
Great. Okay. All right. So the last topic I have is on revenue, like revenue projects within crypto. So what do you think about revenue-based crypto native projects? Like I would say Hyperliquid and Pump.fun are kind of the most like the biggest cases right now.
Well, I think Solana's the biggest case.
Okay, please.
I mean, Solana's done $2.5 billion of chain revenue, setting aside the apps, just the Solana L1 in just a few years. I think it's almost $2 billion in the last year or two. So I think that the revenue lens on the space is very compelling. Let me provide a comparison. For people who, followed along with the development of the consumer internet, it started out being a conversation about page views and eyeballs and visitors. It developed into a conversation about monthly active users and daily active users. And then it developed into a conversation about revenue and profitability. And it went on a journey over about 15 or 20 years of development. I think crypto similarly has been in these sort of page views, eyeballs. You tell the story the way that you want to tell the story. Is it active wallets? Is it TVL? Is it throughput, transactions? And I do think it makes sense that this space will over time mature into certain metrics that help people understand what's happening on a blockchain. And I don't know that means that revenue will be the only thing, but revenue is of course very intuitive and relevant to investors. So I think it's a super interesting possibility that we may mature now into a phase of crypto's maturity where people want to ask about users, they want to ask about revenue. And I agree. I think it's one of the things that makes Hyperliquid and Solana so compelling is when you look at that metric, which again, historically has not been the metric of focus. But if you look at that metric, there's a lot of economic value. And what's implied is that the blockchain itself is very valuable such that people are willing to spend that money. So I think it's a super, super interesting development in the space.
I mean, again, I like these frameworks that you use to help, I guess, make these ideas digestible.
Sure.
I also think it's a sign of maturity in crypto that we're starting to care about things that TradFi kind of accepts as a baseline, right?
Yeah, right. Yeah, standard elements of business.
Does your project make money?
Yeah.
And return it to investors?
Right. Yeah. I mean, we don't want to lose the soul, so I don't want to come across as like a suit-wearing soulless person who just cares about revenue. I mean, that's not the only important thing in business in general, and it shouldn't be the only important thing in crypto. But I do think bringing it into the conversation as not the only important thing, but an important thing is really another useful piece of information for investors trying to make sense of everything.
Yeah. And so then I want to tie this back to DATs.
Yeah.
Because to me, this seems one of the more, this is another compelling reason why DATs are going to be very important.
Sure.
Is because it'll give equity investors access to things like hyperliquid.
Sure. Yeah.
Or pump.fund or things like that, right?
Sure.
Which I think is going to be much harder.
Yeah.
To spot
ETFs.
Yeah.
Yeah. Totally. That's a great point.
Yeah.
I think DATs that have a story about access, like in the case of Pipe, and we have filed for Pipe ETFs in the US and Europe, so I will note that. But the extent to which a DAT can create access that otherwise isn't there, I think it makes the DAT more and more useful.
Yeah. All right. So last question, and this is kind of connected to the DATs and everything else. So the way has been cleared now to kind of like, I would say systematically get crypto or digital assets into ETFs, right? Like finally, do you imagine like within 12 to 18 months, I don't know, the top 30, 40, 50 coins will all have spot ETFs?
Okay. So the interesting thing in the US is that the SEC came out with this new criteria called the generic listing standards. And as of right now, it's more complex than this, but the simplest way of interpreting it is if a crypto asset has futures trading on Coinbase derivatives, CME, Bitnomial, maybe one other, I can't quite remember, for 6 months, then an ETF is possible. So you said 20, 30. Right now, I think that makes maybe 10 or so possible. So it could be more, but that's the criteria that the SEC set for it, at least as of now. They could expand that criteria, more derivatives could start to trade. So I think those are some of the specifics. I do think the punchline is we're about to have a lot of ETFs in America.
And on that, what do you imagine the appetite for that like long tail of crypto assets to be?
I think a decent proxy and starting point for people. I mean, I'm not omniscient.
Of course.
And but I think a decent way to build at least a hypothesis around this is to just look at the market caps. So say, where are the Bitcoin ETFs at? And then for this asset, how big is the market cap of this asset compared to Bitcoin? And you can work backwards that way. That's not perfect, of course.
Yeah.
And different assets have moments and stories that may resonate more with individuals versus traditional investors, but I think it's a decent proxy.
Yeah, and then that is an awesome way, and I'm going to use that myself. There are obviously little wrinkles, like for example, hype.
Yeah,
will probably be there will be more appetite than normal, just because it's not readily available on most exchanges.
Right.
So this is offering
access
if you don't want to get on chain and get a wallet. And stuff
Good
like
point.
That. So, but in general, yes, I think that's 100% a great way to look at it. Awesome. Well, thank you very much, sir. I appreciate it. I can't wait for the next one.
Right on.
And I'm going to wear a blazer next time.
Yeah. Always a pleasure, man.
Thank you very much, sir. Yeah. All right. That was Hunter Horsley. We will be back soon with the next interview.
When crypto leaders want reach and results, they choose Bitcoin.com. A global audience, massive reach across social, web, and mobile, engaged users who trust our brand, and campaigns that move at the speed of crypto. From press to podcasts, X to SEO, display ads to rewards integrations in the app, Bitcoin.com delivers exposure across every channel that matters. Our clients include the world's leading exchanges, wallets, and gaming platforms. When they need impact, they trust Bitcoin.com. Get your brand where it belongs, in front of millions. Partner with Bitcoin.com Media today.
Stable, but exposed. If your dollar token can be tracked, frozen, or flagged, it's not freedom. Freedom Dollar is the first uncensorable stablecoin, private by design, built on Zanu. Unlike Tether or USDC, Freedom Dollar hides your balance, your activity, and your identity. No tracking, no freezing, no middlemen. Hold, send, and swapped Freedom Dollar privately, right inside the Bitcoin.com wallet. And now you can even spend it worldwide. Privacy isn't a luxury, it's a right. Freedom Dollar is your escape from surveillance finance.
Until now, fiat balances only lived on centralized exchanges and fintech apps. Not anymore. Bitcoin.com Balance brings fiat balances to the decentralized world. That means you can buy and sell with ease, but you always keep complete control of your crypto. Once you've funded your Bitcoin.com balance, you can buy Bitcoin and 50 plus cryptos in seconds. No more failed transactions, lower fees, and you can sell back into your Bitcoin.com balance anytime. Need Bitcoin fast? Just tap, confirm, and boom, crypto in your wallet. No waiting, no friction. Bitcoin.com balance. Power and security of decentralization, the ease of a centralized exchange.
Did you make it, son?
Yes, I'm here. They took everything from me. My money, my passport, my phone.
Don't worry, it's going to be fine. Did you remember the 12 words?
Yeah.
And we are back. We're here with James Lee, founder of Caspa Finance. James, thanks for doing this. How are you doing today?
Good, Graham. Yeah, doing well.
All right. Thanks for joining. So
Thanks, man.
let's get started with just a little bit about your background. How did you end up in crypto and what are you doing now?
Yeah, good question. Sort of found crypto probably back in 2015, 2016.
Pretty early.
Yeah. Oh, well, I guess. I would have liked to have been earlier, like mining Bitcoin on my
Obviously.
CPU or something. I took a voluntary redundancy and took a year off overseas. And then on the way back, I didn't want to go back to corporate land. And yeah, I guess I discovered it in Vietnam, actually. Just some dodgy Ponzi scheme or what have you. But I started piling into Bitcoin and I guess found out the hard way of how to sort of earn or trade and things like that. Sort of started out in some weird places on the net.
Yeah.
And then,
What were you up to before your crypto life began?
good question. I used to run major music festivals in Australia, touring British super brands and European brands and US artists and everything like that. And then, I went into corporate land after that and played it safe for about 10, 12 years. And then, finally, I found crypto. And ever since then, sort of gone down that rabbit hole in a big way.
Okay.
And
So how did
I start
the
develop?
Caspa thing evolve? What
Casper, Casper Finance. I've been developing and helping stand up projects, advising for projects since around 2019. Casper Finance sort of eventuated. We call it KFC because everyone who doesn't like KFC, right? Met Casper Ecosystem Foundation in Hong Kong when I was at a conference through a mutual friend, and sort of started off conversations then. We've been building on EVM chains for quite some time, and definitely like EVM chains in their sort of infancy. Like a lot of the Polkadot parachains, we pushed out the first DEXs and DeFi on. So I love a challenge, and we got sort of invested in via the Casper Ecosystem Foundation or CAF, and I guess the rest is history. We started building around March, April, and we stood up the first V3 Super DeFi protocol on Casper, Casplex, which is a ZK EVM chain on top of the Casper OG chain. So bringing smart contracts, DeFi and trading in that sort of manner to the Casper ecosystem.
Okay, if you had to draw a comparison between Caspa Finance and maybe a more well-known project in
Uniswap.
the crypto space. Okay,
Yeah.
so it's the Uniswap of Caspa.
I'd like to say that. Yeah, well, we're marketed as the flagship DEX for Casper. There are other DEXs that have sort of launched in parallel. We feel that we're slightly superior because we're V3. A lot of those are V2. Not to, it adds a different layer of complexity to the build, but also cheaper and faster transactions overall. It's better technology. But
Okay, so a decentralized exchange, but finance. So
yeah.
Could you?
I'll extrapolate on it. Yeah. So essentially, we are super DeFi protocol. So AMM DEX, like a Uniswap, and then we've got a farming and staking pool. So where people add liquidity to a DEX, say in a market pair, they can then farm that liquidity, and it gives them it adds a layer of stickiness to them, and keeps them on the platform. But it gives them another earning potential as well. So farming in that essence, and then I guess the finance side comes from the borrowing and lending protocol as well. So we've also got an Aave style V3 borrowing and lending protocol that we include in that suite of tools, and that'll be stood up shortly. So we're just in the final stages of testing that, and then we'll get it audited and then push it live. I think when you're locking up people's hard-earned crypto, you want to make sure that you've double audited or triple audited and tested out and tried to break it before you sort of expand and release it.
For sure. What kind of traction have you seen so far?
Look, I guess entering a new community can sometimes be toxic if you're not well known in the space. I think we've achieved some milestones, and some of them have been well received, some haven't. Everyone wants to know who you are. They want to dox you and ask you a million questions. But I think any community is just worried about potentially being rug pulled, or we come from a bricks and mortar company. We're a bricks and mortar business in Dubai, where we run a lot of projects, so we can sort of talk to all that with confidence. But I guess it's been well received. I think the fact that we've had support from KEF and via BTC is also an early investor is testament to the success metric.
Could you go into that a little bit? So
via
BTC.
Via BTC. I mean, obviously everyone knows, or maybe doesn't know, third largest mining pool in Bitcoin in the world. They've been very supportive of us. BTC and KEF are also potentially injecting liquidity. So obviously, any decentralized or DeFi suite is only as good as its TVL. Reduces slippage and a whole range of other things. And it's a lot more attractive to the consumer as well. So I guess that's a partnership. They came in through their capital arm. So
Does Casper Finance have a token?
We do. Not yet. We've got an IOU currently on our decks. And in around 4 weeks, we will be going to market with that. So we'll TGE, I would say within the next 4 weeks. And obviously, we want to build a good enough platform for investors that have actually bought the token. We didn't do a public round. We only raised capital through VCs. But essentially, we like to give them a great platform to launch off, get that best price discovery. So I think, October, which we're in now, and November, to the moon, right? I don't know. Is that how it goes?
I forget the one for November.
Yeah. What is it?
I forget.
Oh, yeah, I think it is. Well, let's just claim it's to the moon.
Okay.
Or Bull Run maybe, and then to the moon after. But we'll launch probably late October, early November, I would imagine. Yeah,
Okay.
with that token.
And what is the value prop of the token or utility? Or
Good question. Yeah. So I guess like Sushi Swap, where they've got their farming protocol and stuff like that as well. The utility is as a rewards token. And then we've got a range of other things that we've built in. We see a lot of any touch point that a user sort of messes around with on our platform, in any of the suites, will we be rewarded with KFC tokens as well. We have got a NLP trading bots system that we're building out as well. So we do actually build a lot in AI as well across different projects.
what's NLP trading bot?
A natural language processing. So essentially, you could say once we go cross-chain in the desired state, so future iterations down our sort of roadmap, users may be able to say, I want to swap Casper with BNB, and that'll just naturally, basically, you'll sign. It'll create a signature through the smart contract. That user will basically say, I'm willing to pledge this much money for trading bots. Go for gold. And then essentially with the NLP, you'll say, I want to swap this for that. And then the AI will actually execute that order for you.
Okay.
On our,
Something like an intense-based.
And I think people are lazy. I think, gone are the days where you have to search for that market pair. You go to the trade button, fewer touch points, I guess, adds, ease of use. It's like a convenience store, right?
Yeah.
Why go to the supermarket and save money when you could just go down to the supermarket and buy a bowl of ramen? But you know what I mean.
Yeah.
So I think adding that convenience and fast food element to the KFC brand.
So that you said the KFC token is going to be used for rewards.
Rewards and utility, yeah.
Is there an airdrop or points farming?
Yeah, absolutely.
Right now?
Not yet. So after TGE, a couple of weeks after TGE, we will be rewarding our testnet users that tested it, broke it, gave us feedback in those initial stages when we stood it up on testnet, so the DEX. And then we've run a series of social campaigns as well, which will also reward those users. That airdrop will be, a couple of weeks after TGE. Obviously, we'll want to have some good price discovery on a SEX and our own DEX before we sort of airdrop and dilute it.
Zooming out a little bit, I'm not that familiar with Casper.
Yeah, sure.
I wonder if you could explain to me what it is, how it's different from other chains.
Yeah.
Who's using it?
Yeah, absolutely.
What kind of apps are popular there? Or
Yeah. So until recently, until 5-6 days ago, Casper didn't have smart contracts. So essentially, the way I see Casper, and I was an early investor, I would say, in Casper. I bought it on exchange shortly after it was released in, I think, 21 or 22. So Casper, in my opinion, kind of feels like the continuation of Bitcoin. So, Jonathan Simpliski, I believe I probably butchered his surname. He actually was writing with some of the devs for the original, for future plans for Bitcoin. I see it as an amazing chain by way of throughput and TPS. Currently, it's sitting at 10 blocks per second, which is phenomenal. And that's the OG Casper chain, not the smart contract Casplex chain. But yeah, it's an amazing blockchain with amazing block DAG technology. And yeah, it's built for speed.
Block DAG.
Block DAG, yeah. They call it Ghost DAG, right?
Okay.
Yeah.
DAG is directed select graph or something. What is it?
Yeah, I should know this off by heart, but I don't.
Yeah, okay.
I'm glad you don't either. But you got the internet right in front of you. Why don't we chat GPT? Look, effectively, Casper, the OG chain that sits under Casplex of what we built on, which allowed us to push out these smart contracts and DeFi experience. So until now, or 6 days ago, the Casper ecosystem was starved for DeFi options. DeFi is where people pile in with TVL. It's a good opportunity to attract builders to your ecosystem. Not to say they weren't builders. They used different derivatives, but it was really hard to code on the original Casper. So, look, I think Casplex is potentially going to be that bridge between mainstream and Casper and really sort of continuing that vision of scalability. Even the OG chain will continue to scale anyway. I think the next step is 16 or 32 BPS, which basically, like, that actually annihilates Solana speed.
Okay. Is there a region of the world where Casper is more well known, where people are, the users come from?
It's seriously worldwide. I was at a barbecue, my own barbecue for my birthday not long ago, and in the countryside. So we were talking about earlier where we sort of live. And there was this middle-aged lady. So to speak about geo range and demographic, she's around 65. And so we were talking, and I work in a bricks and mortar business as well. And she was saying, "Oh, do you know anything about Casper?" And I said, "Oh yeah, I'm actually building on their smart contract layer." And I said, "Oh, why?" And she said, "Oh, I've got a bag of it." She had like 75 grand. She's got more Casper than me. And I was like, wow. But in saying that, so to answer your question, I think, Casper Experience was recently held in Berlin. I think that was a conference just held for Casper. I think first of its kind in the world. I think they did 400 or 600 people. I think that's a first iteration. I think you got to build on that. But I think there's a good distribution around the world. I think, it had the ghost icon, like Casper, the friendly ghost, spelled differently, obviously. But I think it's got worldwide appeal. And I think a lot of, hopefully, some Bitcoin maxis will sort of understand that it feels like the continuation.
Could you go a little bit deeper into that? Why is the connection?
I don't know. There was
Bitcoin?
It's a proof of work chain, the original chain. So much the same as Bitcoin. And there was no pre-mine. So, there's a lot of other elements to it. I think with Jonathan's original papers on how to scale Bitcoin with Ghost DAG and other papers, I haven't read all of them. It feels like it was a natural evolution of Bitcoin. And Casplex with its smart contracts, I see that as a natural evolution of Casper. So taking it to the masses, allowing it to extrapolate out into the DeFi ecosystem as well, rather than, in all honesty, like Bitcoin, I love it. I'm a Bitcoin maxi, but, and there's BRC, there's chains that you can, obviously create smart contracts on now. But it doesn't feel like anyone's sort of mastered that or taken it to the next level, in my opinion, yet. I think Bitcoin will always be king. Everything else is an altcoin. I think Casper has that appeal, though. I think I don't know, maybe it's one of the suites in your playing cards, maybe not the king, but I think it feels like the continuation. I think the ecosystem and the community are very sort of focused on that as well. They're like little Bitcoin maxis. It's like a little miniature version of it. And I think they really believe in that chain as well. Yeah.
Interesting.
Yeah. In it. Yeah.
Okay, so if everything goes according to plan and we come back a year from now,
Yeah.
where will Caspa Finance be at?
Wow. I mean, obviously my desired state for Casper Finance would be stacks of TVL, to sort of secure it as the flagship DEX in the Casplex and Casper ecosystem. We're also integrated with IGRA, which is another ZK EVM chain that's launching on Casper. They're planning to launch in a couple of months. So we've already integrated with them in testnet as well. I sort of see, future state as ideal future state would be, Casplex has had that ability to actually onboard masses, more developers, more serious developers as well, to really flourish in the network. And yeah, I think, like any other chain, it's got mass potential. And I think with the OG chain, Casper at the, securing that, I think, it's just a beautiful opportunity. And it's happening at the right time as well with the Casplex launch, in my opinion. So yeah, desired state, lots of TVL, lots of users, and, people FOMOing in to Casper and Casplex en masse this cycle. Because the cycle's just starting. I feel like it's just warming up.
Okay, let's talk about that for a minute.
Yeah, sure.
What's your personal opinion on where we're at in the cycle?
Yeah, I mean, I don't know. It's a different one than we've ever experienced before, right? I've been through a couple now. And, with all the institutional capital, the ETFs, I mean, what is it? What's a Trump stable coin? Liberty stable or whatever it is.
Financial.
Yeah, Liberty Financial. I mean, look, it's a different playing field. I feel like, we're going to have all-time high lows. Even if we do venture back into a bear market, I kind of feel like, and there's no magic formula that just says we're going to go up forever. I think we've got months ahead of us. I think this cycle and this bull cycle, if you want to call it that, we're there yet. Maybe not altcoins yet. Definitely Bitcoin's had a good run. I think Bitcoin's good to go to 200K plus for sure. And that would be, I would hope for more, obviously. And I'd hope it drags Ethereum up while it's there, because Ethereum's just not there yet. Yeah, right. So yeah, I think, I kind of feel like, I think October is a good time to accumulate, in my opinion. Let's call it October. And I think we'll get a really good parabolic shift. Maybe it'll be a Christmas run, 2017, 2018.
Yeah.
And hopefully never fall from that for a few months.
Well, I, for one, am here for it.
Yeah. I think we all are.
All right, James, where can people find more about Caspa Finance?
Yeah, Casper Finance. Follow us on X, Casper Finance. On our website, casperfinance.io. I'd love to connect with anyone that's building to help support them. We will have some sort of launch pad. We've got a token creator that we've already sort of outfitted to help builders in the ecosystem push out a token and launch a market on our DEX. Just reach out on LinkedIn or anywhere, man. Yeah.
Hey, great.
Yep.
James Lee, founder of Caspa Finance. Thank you so much for your time.
Thanks, man.
We're going to be right back with our wrap up of Token2049 Singapore. Be right back. See you soon.
Thanks for that.
When crypto leaders want reach and results, they choose Bitcoin.com. A global audience, massive reach across social, web, and mobile, engaged users who trust our brand, and campaigns that move at the speed of crypto. From press to podcasts, X to SEO, display ads to rewards integrations in the app. Bitcoin.com delivers exposure across every channel that matters. Our clients include the world's leading exchanges, wallets, and gaming platforms. When they need impact, they trust Bitcoin.com. Get your brand where it belongs, in front of millions. Partner with Bitcoin.com Media today.
Stable, but exposed. If your dollar token can be tracked, frozen, or flagged, it's not freedom. Freedom Dollar is the first uncensorable stablecoin, private by design, built on Zano. Unlike Tether or USDC, Freedom Dollar hides your balance, your activity, and your identity. No tracking, no freezing, no middlemen. Hold, send, and swap Freedom Dollar privately, right inside the Bitcoin.com wallet. And now you can even spend it worldwide. Privacy isn't a luxury, it's a right. Freedom Dollar is your escape from surveillance finance.
Until now, fiat balances only lived on centralized exchanges and fintech apps. Not anymore. Bitcoin.com Balance brings fiat balances to the decentralized world. That means you can buy and sell with ease, but you always keep complete control of your crypto. Once you've funded your Bitcoin.com balance, you can buy Bitcoin and 50 plus cryptos in seconds. No more failed transactions, lower fees, and you can sell back into your Bitcoin.com balance anytime. Need Bitcoin fast? Just tap, confirm, and boom, crypto in your wallet. No waiting, no friction. Bitcoin.com balance. Power and security of decentralization, the ease of a centralized exchange.
Did you make it, son?
Yes, I'm here. They took everything from me. My money, my passport, my phone.
Don't worry, it's going to be fine. Did you remember the 12 words?
Yes, I know the words. Opera, fabric, stereo, trash, if, void, country, engine, complex, new, fate, purpose.
In this video, we'll show you how to earn Bitcoin, currently at over 30% APY, by staking Verse tokens in the Bitcoin.com wallet app using the low-fee Polygon network. You can also stake Verse on Ethereum, but for this walkthrough, we'll focus on Polygon. To get started, you'll need some Verse tokens. This is what you'll be staking to earn Bitcoin. You can earn Verse for free in the Rewards Center or buy or swap into it directly in the app. You'll also need a small amount of Matic, also sometimes called POL, which is the gas token on the Polygon network. You'll be using Matic to cover transaction fees, which are less than 1 cent in most cases. Now that we have everything we need, it's time to stake Verse to start earning Bitcoin. From the home screen, go to Web3 Explorer, then select Earn Bitcoin on Polygon. Next, you'll need to connect your wallet. Make sure to connect your Polygon wallet that has Verse and Matic in it. Then hit the Stake Verse button, enter the amount to stake, and confirm the transactions. The first transaction approves use of Verse. The second deposits your Verse into the staking smart contract, and that's it. You're now earning Bitcoin in the form of TBTC, a decentralized, one-to-one Bitcoin-backed token. You can claim your Bitcoin rewards at any time by tapping Claim Rewards. Just like when you staked your Verse, you'll again need a little Matic to cover the fee. Your rewards come in TBTC, a decentralized version of Bitcoin that's usable in Web3 apps and faster to transact than mainnet Bitcoin. It's always backed one-to-one with real Bitcoin on the Bitcoin blockchain, and you can swap it to mainnet Bitcoin anytime. You can unstake your Verse anytime, instantly, and without penalties. When you do, you'll get your Verse back, plus any unclaimed rewards. And that's it. Stake your Verse tokens in the Bitcoin.com wallet app to start earning Bitcoin today, fast, simple, and self-custodial. Try it now.
Free self-custody Bitcoin. Scan this QR code right here from within the Bitcoin.com wallet app. You better hurry up. Anyone can get it. Oh, is it still there? Is it gone? I don't know.
In this video, we'll show you how to earn Bitcoin, currently at over 30% APY, by staking Verse tokens in the Bitcoin.com wallet app using the low-fee Polygon network. You can also stake Verse on Ethereum, but for this walkthrough, we'll focus on Polygon. To get started, you'll need some Verse tokens. This is what you'll be staking to earn Bitcoin. You can earn Verse for free in the Rewards Center, or buy or swap into it directly in the app. You'll also need a small amount of Matic, also sometimes called POL, which is the gas token on the Polygon network. You'll be using Matic to cover transaction fees, which are less than 1 cent in most cases. Now that we have everything we need, it's time to stake Verse to start earning Bitcoin. From the home screen, go to Web3 Explorer, then select Earn Bitcoin on Polygon. Next, you'll need to connect your wallet. Make sure to connect your Polygon wallet that has Verse and Matic in it. Then hit the Stake Verse button, enter the amount to stake, and confirm the transactions. The first transaction approves use of Verse. The second deposits your Verse into the staking smart contract. And that's it! You're now earning Bitcoin in the form of TBTC, a decentralized, one-to-one Bitcoin-backed token. You can claim your Bitcoin rewards at any time by tapping Claim Rewards. Just like when you staked your Verse, you'll again need a little Matic to cover the fee. Your rewards come in TBTC, a decentralized version of Bitcoin that's usable in Web3 apps and faster to transact than mainnet Bitcoin. It's always backed one-to-one with real Bitcoin on the Bitcoin blockchain, and you can swap it to mainnet Bitcoin anytime. You can unstake your Verse anytime, instantly, and without penalties. When you do, you'll get your Verse back, plus any unclaimed rewards. And that's it. Stake your Verse tokens in the Bitcoin.com wallet app to start earning Bitcoin today, fast, simple, and self-custodial. Try it now.
What if you got pages for exploring crypto? Read news, check prices, discover new projects, and stack rewards along the way. Over $1 million in rewards paid out so far, and we're just getting started. Download the Bitcoin.com wallet today. The wallet that pays you.
In the last 7 years, the price of Bitcoin has grown by 50.6% per year on average, far outpacing stocks, commodities, gold, real estate, emerging markets, and bonds. At a $2.2 trillion market cap and growing, Bitcoin is now comparable to currencies like the Australian dollar, commodities like silver, and companies like Google. Bitcoin is here to stay, but as governments around the world print money and Bitcoin vacuums up global liquidity, it is poised to grow much larger. Here's how much one Bitcoin would be worth if it grew as big as a company like Nvidia, then gold, or the US dollar, global M2 money supply, global equities, global bonds, and global real estate. Nothing can stop this train.
Do you think your crypto is private? Think again. On Bitcoin, Ethereum, and most major blockchains, every transaction you make is public, traceable by anyone, anywhere. What you send, who you send it to, when you send it, how much you hold. All visible, forever. That's not just transparency, it's surveillance. Confidential assets on the Zano blockchain changed the game. Built for privacy from the ground up, Zano's system extends its powerful protections like untraceability, unlinkability, and amount concealment to any token. This opens the door to fully private financial tools. Imagine a USD stablecoin, but shielded. Imagine Bitcoin wrapped and transacted anonymously. Imagine enterprise tokens that move without exposing sensitive details. Confidential assets make all of this possible. And now, with the Bitcoin.com wallet, you can hold, send, receive, and swap Zano's confidential assets, all inside a single, easy-to-use, self-custodial app. Privacy isn't just an add-on, it's the future. Update your Bitcoin.com wallet today and step into the next era of private crypto.
I got into crypto last year when I joined Bitcoin.com. It seems like it was the right time because when I joined the company, everyone is into crypto, and I guess it influenced on me. And then I started to get into crypto, and then I started to buy, and then now I'm like a little bit of a DJ now.
So I got into crypto sometime in 2014 or 2016, I can't remember. But I was farming Ethereum. I had like 2,000 plus Ethereum at one point. But it was when it was worth nothing. It's like 1 to 2 USD each. So I sold it off. I made a good profit. But 7 years later, I could have become like retired. So the only reason we're having this conversation right now is because I should have held.
No, when I first heard about crypto, it was from my ex-colleague, and it was about year 2017. I was totally new and I don't know what about this. And then come to year 2019, at end of 2019, I was invited by a friend for a seminar, and that was the first time I know what is cryptocurrency and what is Bitcoin. I thought that it's very interesting into the technology and the blockchain kind of technology. Then I tried to, firstly into future trading and spot trading, and more into like, knowing about different exchanges, the wallets, and then into meme coins. So I then become so degen into playing or trading memes.
I went into crypto space at about year 2019, where I was working for an angel investor that is having a portfolio company in crypto space, which interests me quite a bit. So I decided to venture into this field.
I got into crypto while I was working with agencies on finance-related clients. And I always felt like crypto was this interest that I could never really speak to my colleagues about. So it's really interesting entering a crypto company where my interests in crypto become part and parcel of daily life.
So at Bitcoin.com, I'm the FP&A manager. I translate accounting data for the management because, it's just complicated. So the management wants to get insights, right? So I provide the insights from the data. So I'm kind of like a translator, so to speak. A financial translator, if you will. Yeah.
I'm the growth lead, and what that means is leading initiatives that lead to growth, whether on partnerships fronts or within our internal departments.
I'm the compliance officer for Bitcoin.com. Basically, I make sure that we stay regulated in certain countries, and then we follow the rules and regulations that's being set off.
I'm finance director of Bitcoin.com, so oversee the accounting tax function as well as treasury.
I'm actually working in the finance department, oversees a 2 cost center, plus in charge of the revenue-related data transaction. Basically for me, I have been in Singapore for more than 30 years, so I like the cleanness and the safety in Singapore. The environment are good. You have to mix around with positive people, and it's a hub for most of the Southeast Asia countries, most of the people internationally. Yeah.
I like living in Singapore because it is safe, it's clean, and there's lots of food because I'm a foodie.
I would say because it's my home, I'm obliged to like it. Like you can't really beat the safety and the cleanliness we have here with some of the things we take for granted, like the MRT system. I think the weather is very predictable, which is good. So a lot of people complain that, oh, Singapore is only rain or shine, but that's good, right? Because if you
And we're back.
Sorry, David. Token2049 in the books.
We're back for our last segment of the day. It's been a great day of interviews, David. You had some of your third billionaire of the week.
Yeah, third or fourth, depends on,
All right. It's been a long day, man. We're going to be announcing the winners of our TBTC giveaway. You got $1,500 to give away here. We're going to be announcing those winners shortly. That's what everyone's here waiting for. But David, first, let's get your thoughts on the day or on the conference in general. First of all, we're going to have two questions: most interesting interview and most interesting non-interview conversation.
All right, I'm gonna cop out and say two interviews. So one of the interviews I recorded before the conference, Paolo, my pal, my boy.
Yeah.
E-Dog, as we call him. Yeah, it was a really, really short conversation. So, like, if you didn't see it, we're gonna kind of package it up and edit it. You can watch it. It's 12 minutes, but honestly, in that short 12 minutes, it kind of reframed how I am gonna view Tether, like news coming out, because he really drilled home in my head that everything they do is with distribution in mind. Everything from investment to where they put USDT. So I think it really you can kind of plan or see how Tether's going to react to certain events or news based on how it's going to affect their distribution. So I really like that. And then the interview I just did, my last interview, Hunter Horsley, I really enjoyed that.
Hunter Horsley, Bitwise.
Co-founder and CEO of Bitwise Asset Management.
So that's a crypto custodian?
It's a crypto asset management firm. So like they basically, wealthy individuals, whatever, but now not, normal people too, I guess. They come to them and they say, we don't really want to
manage our keys ourselves.
Yeah, we don't want to have hardware wallets and then have all this kind of risk. We don't really understand the space. Here's a lot of money. We'll pay you a fee. Now be good custodians of this and grow that. And that's what they do. As you know, they also do a lot of research, right? We often cite their research on token narratives and the weekly, right? So, and Hunter is just awesome. This is my second interview with him. And he has these, I've heard of this a lot with like Silicon Valley people, which he is from. They think they look at these different problems and then try to create a framework that helps them understand it. And in that conversation I just had, he had like two or three frameworks for some of the questions I was asking. And it helped me. His frameworks are, I'm going to now like adopt. And it's going to help me view these different kind of narratives like DATs, stablecoins, and revenue projects.
Sorry, David, I can't focus. There's a giant
what is that?
It's a slinky monster.
A giant slinky monster walking by. Just part of the hoopla here at Token2049.
Oh wait, no, that was a hallucination, Graham. That was a shared delusion.
We did do 17 interviews in the last
17 or 18, I think, something like that. How about you?
All right, so most interesting interview for me, it's got to be the quantum guy, Mattia. People have been writing off that quantum cryptography is going to like that Bitcoin's in danger from the whole quantum computing revolution. And this guy he's ringing the alarm bells about it, and there's a lot to think about there. I want to dive into that space more and think more about it. That's one. And the other is, since we're doing two, even though we only have one, the other is the gentleman from Whitebit, who's a chief marketing officer. And I'm in marketing. It was fun to sort of geek out with him about it and just understand how he thinks about the different segments and also how he analyzes ROI for marketing spends. And it was good to have this another marketing guy confirm my belief that you can't actually, despite what ChatGPT will tell you, you can't actually quantify the ROI of brand marketing spend. You can't do it.
So it's more art than science.
Yeah.
And that means maybe either you have the gift or you don't.
Yeah.
At the end of the day. Graham, do you have the gift?
Well, obviously.
Here you are. Here you are, boosted up at Token2049.
I got to say, though, the Whitebit's idea of this international trading competition, very cool. It's like, like esports for trading. They did it early in the year. And since then, you've seen copycats. I think it's a great idea, great marketing gimmick. But also, yeah, it's cool. And it sounded like the event went really well, and people were really excited about it.
Oh, that's cool.
Yeah. And he's shouting out the winner on the camera.
Oh, really?
Love that guy.
I'm gonna I'll watch that after this. I wanna see that because you and I used to work in marketing, much to my eternal shame. No, but I think marketing is awesome, and you and I have talked a lot about marketing in crypto over the years, long conversations. Probably that you had with this other gentleman. So I want to hear about it. All right. Another question.
Most interesting and non-interview conversation. So from your vowels around this labyrinthian.
A question off camera.
Yes, question off camera or conversation that you had.
I'm going to give two again just to irritate my co-host. Irritate my co-host. The first one is worst.
Okay.
All right. First one is worse.
Yeah.
I was outside trying to get some sun and just, feel like a human again. Yeah. And not like a piece of boiled meat. Yeah. And just all these eyeballs on me and, like an object.
Yeah.
I was assailed by pairs of very, very energetic Zoomers.
Okay.
And I just, I was so stupid in that conversation that that's why I didn't like it. Your brain is cooked. It's out there like this. And they're asking me good, intelligent questions. And I just made a fool of myself. Yeah. And then, sorry, my favorite conversation, I talked with Thomas we interviewed him at KBW last week.
Yeah.
Frederick and I interviewed him. This guy is so awesome. He briefly stopped by the booth and we just talked for about 5-10 minutes. So down to earth. Yeah. The guy's insanely smart.
You can see just from the resting posture of his face how intelligent he is. There's something about he's got this aura.
Yeah, yeah, and also just to be so smart and down to earth and like gracious. I was so this is towards the end of the day. I'm feeling exhausted, but talking to individuals like that just kind of rejuvenate you. And, we just shared nothing important, just how's your conference going? But just a swell man.
So for me, the most interesting and non-interview conversation I had was with Charles Hoskinson's security detail, all ex-special forces. It's thank you for your service, sir.
Service.
It's very cool. Just to hear all about what that's like, and Charles Hoskinson sounds like a really great guy. Like this guy couldn't say enough about how he's a family man. He takes care of everyone.
That's awesome to hear.
Cool, yeah.
Yeah.
And all right. So at worst, I didn't have any bad conversations, and that's because I have this ability to just people can detect that I don't don't talk to me. All right. So I don't get accosted by Zoomers.
Well, my guard was down because my eyes were closed.
All right. So let's get to what everybody really cares about, which is who's getting the $1,500 remaining of TBC of Threshold Networks Bitcoin. And we've got 3 questions. All right. 3 people, 3 winners here.
Okay.
First up, we've got at Nikki Vladim 42390. Isn't that the Beverly Hills?
No, that's 90210 or something. But I mean, I'm not that old, so I think I saw that on
All right.
History Channel.
Question is, how do you scale up USDT so massive right now? Amazing work. Why do you choose Tron as minting network? What's the advantage? Now, David, you are you're not Paolo himself, but I believe you'll presume to answer for him on this one.
Yeah, I mean, so there's multiple parts to this, and the overarching answer is just kind of here's the phrase that I hate to hear, but I'm going to use it now. It's path dependent. It's path dependent, Graham, because it really is like a historical. There's a historical reason. USDT was the first stablecoin. Maybe you can quibble about this, but it basically was the first stablecoin. There wasn't another game around, and before that, trading pairs were against BTC, right, or like a derivative of BTC, like XBT or XBT. So having a stablecoin as in a trading pair was a huge boon for the entire industry, and Tether was the only game in town. So that answers the first part. How did they scale up? Right, they were the only ones around, right? And even when other stablecoins came, Tether was not US based, which helped it early. And then when you had like USDC come out and like Paxos, still foreign entities, especially like Chinese people before China banned crypto, basically, they still had reservations about trusting a US-based, US-regulated stablecoin, and Tether ostensibly was outside of that. Now onto the Tron as the minting network. That's also historical. Back when Tether got really big, the biggest users, the biggest volume from Tether was between exchanges, right? So like Binance would settle balances or whatever with Bitfinex and stuff like that, and so they would transact. And back then, Tron was the cheapest chain, right? Ethereum mainnet was really expensive, and Tron was insanely cheap. And so everyone just used Tron to do USDT transactions. And then because it was the USDT transaction chain to use, everyone just used it all the time. And that's how I knew about Tron. Everyone I knew during that time used Tron to exchange USDT. Yeah. And I did too. I don't know if you did as well. Yeah. So there you have it.
All right. Yeah. Thank you, Nikki Vladim. You're the first runner-up, so you get $250 of TBDC. Make sure you send us a DM at BTCTN, and we'll get you hooked up. Next up, we've got 0xSTHEX. 0xSTHEX. With your expansion into Europe and launching stock tokens, how do you plan to balance regulatory compliance with making investing simple for users?
Presumably, this is from the first interview, right, with Vlad Tenev, the CEO of Robinhood.
Yeah.
And in that interview...
So since you're answering for billionaires, David, today, you answer this one as well, please.
Yeah. I got you covered, Vlad. Don't worry. We call him B-Dog?
Yeah.
Oh, terrible jokes. Okay, so in the conversation we talked about how they are launching a lot of products in Europe, not in America, and the reason for that is that there really isn't a need for America right now. Obviously, American markets are the deepest, the most liquid. If you're in America, you get some benefit from trading tokenized stocks, but not really. Like it's not a 10x better experience for U.S. users. Just as because I didn't even know this, but they already offer 24-hour a day stock trading through Robinhood app in the U.S. Right? So like if you're like, oh, but tokenized stocks, you can do 24-hour trading. Doesn't matter. You can already do that in Robinhood. So there's like a very small improvements from the user retail side. Access to U.S. stocks outside of the U.S. Now that's where you're going to see a lot of demand for like tokenized stocks. All right. The regulatory complexity, compliance, you have to think of it differently for Robinhood. They are a giant billion-dollar company with like, I mean, I don't even know how big their compliance departments are for every country in the world, right? Like, so this is if they have a moat, this is like kind of one of them. Big companies, whether it's Google or Facebook or Robinhood, this is one of the things that gives them an advantage is that any regulatory hurdles or difficulties, that favors incumbents and it favors already large companies, right?
They can comply.
And they want, maybe they say they don't want it, but they want that because it prevents upstarts from getting in.
It costs a lot of money to comply.
Yes. And so they don't care about the regulatory compliance because they'll do it.
Yeah.
Right. So I would say it has no effect whatsoever. And in that interview, I don't know if you notice, person, I didn't talk about how difficult or onerous compliance was because I know it doesn't matter for someone like Robinhood, right? It just doesn't. Okay. So anyway, all they have to focus then on is the UI UX stuff, which we talked about in it. And in that regard, because of the work they've done with 24-hour stock trading in the US, they already have a leg up on the competition. He said we've already kind of sorted it through some of these like very obvious pain points of like when prices can mismatch and then they have to rematch. So they've already kind of figured out that tech and that technology.
So they're ready to dominate.
Damn.
All right. Good answer, David. And thank you, 0xSTHEX, for your question. You're going to get $250 of TBDC Threshold Networks Bitcoin. Make sure to DM us and we'll hook you up. Last but not least, we have the grand prize winner, $1,000 of TBDC. And this question comes from Alta underscore reality. Alta underscore reality. You get $1,000 TBDC. And his or her question was, do you think the next cycle of innovation will be powered more by scalability solutions, bracket L2s, rollups, or by new primitives like intent-based architectures and AI x crypto? Do you have an answer for this?
I have an answer. I mean, this is
Can I say my answer first because it's probably basic? And
I mean, my answer is going to be basic because this is such a large question. But go ahead.
I think the latter. I think it's going to be intent-based architectures, AI crypto. The reason I say that is because I think on the infrastructure side, we're probably already there. That's what has been happening in crypto for the last 10, 15 years. Infrastructure has been building up. It's to the point now where it's good enough. So the next innovation is actually just going to be more on like the UX, which like intent-based architectures. That's how I think of that is like UX, user experience, and AI x crypto. Also, I feel that's kind of a UX thing. Like you'll be able to just ask say the AI is going to help you out.
And it'll do it very efficient. Yeah. Okay, so my answer is one of those terrible answers. that
it's going to be both.
Yeah, exactly. It's going to be, but it really is. And there's a lot of reasons for this because of the surface area for scalability is still so large, which is another way of saying this is crypto is still slow as shit. Right.
Yeah, okay.
Right. So there's improvements in like every facet of crypto. And everyone's solving this from different angles. Like Solana, for example, is kind of solving it from like a holistic, like the base layer is the thing.
Yeah.
And so for things like Solana, intent-based architecture, maybe AI times crypto, some of their distributive compute or partnerships like 00, which are on the physical fiber hardware side, and what's like distributed gas markets and all that kind of stuff. Firedance that can speed up like these single kind of monolithic chain type deals. But then you're also going to have like I still think you're going to have a proliferation of like L2s and L3s, right? Like I still refuse to believe that Solana is going to be the monolithic thing, and that it's going to be able to handle all of the TPS, Anyway, and so then you'll have lots of scalability coming out from L2s and rollups and stuff like that.
I actually think that it's just going to be more app chains. They don't like just more chain. The chains themselves don't need to be like that much faster or better. They're just going to be more chains, and interoperability is going to be the thing.
I mean, I think it will get a lot faster though, right? Like, so I spoke with Uma Roy yesterday of Succinct, and again, it's an infrastructure project that has nothing to do with retail. The retail will never ever interact with this company ever, right? Because they're just pure infrastructure, and I mean, how you're unbundling different parts of a blockchain, right? The execution layer, data layer, consensus, and all this kind of stuff, right? Succinct is actually even unbundling execution a little bit, right? So even this execution thing that has been unbundled from the blockchain is now itself being kind of parceled out, and they're plugging in ZK into this execution stack for any blockchain, and you're getting massive increases just by now using ZK instead of whatever crap that they were using before. And so that kind of stuff will just be so easily plugged and played with with whatever chain you have. Even Solana, for example, you might be able to just be like, oh, instead of using this part of execution, you can now use this infrastructure project that it's devoted its entire life to just doing this one thing the best. And so all of those will add up to lots and lots of improvements in scale. But again, this is to say, I do think that you'll see tons and tons of app chains, but they'll all get faster. And at KBW, we talked to another infrastructure project, and the beauty of all this stuff is, as these infrastructure providers get better, right? So they're constantly updating their technology because that's all they do. Anyone who's plugged that into their stack gets all those benefits without having to change anything.
Yeah.
You know what I'm talking about?
Okay.
So,
and with all of these speed and scalability improvements, I guess the idea is that there will be unlocks of use cases, right? Innovation.
Yeah, I mean,
will be made possible thanks to the infrastructure improvements.
I hope.
Yeah.
Right. That is the hope, Graham.
Yeah. So we're finally going to get that, I don't know, social network or something on chain.
Or we're going to get that, we're going to get that thing that we haven't had yet in crypto, which is the thing that's unique to crypto. Like a what's it called? The Facebook wall. What do they call that thing? The scrolling feed.
Yeah.
Right. That was a new thing.
Yeah.
At one point, and it didn't exist before that.
Yeah.
And now it's everywhere, right? Like X and everyone has this thing, and we all just take it for granted.
Yeah.
But if you're coming from the early internet in the 90s, where they were just taking like encyclopedias and putting them on the internet, oh, it's a Wikipedia.
Yeah.
Okay, cool. We get that. But there was no analogy to like, here's a news feed.
Yeah.
Kind of thing.
Yeah.
I don't think there is something like that in crypto. Skeuomorphic. Yeah. There's nothing like that in crypto yet, which is like, oh, this is a brand new thing. Yeah. Like crypto thing that it's just not possible or even conceivable.
Yeah.
So,
but hopefully something like that gets unlocked by this infrastructure upgrades. These infrastructure upgrades. All right. Alta_reality. Great question. And thank you for asking it. You're going to get $1,000 of TBC. Send us a DM at BTCTN. And that wraps it up, everyone. Thank you, David. You
did it.
Look exhausted, but
you're saying I look bad. This guy.
All right, that's it. We're done. Know that we're finished. Okay, thank you, everyone.
We'll see you in Abu Dhabi.
Yeah, I think that's gonna be our next one. Abu Dhabi in December. Check it out. We'll be there. We'll probably have more giveaways. It's gonna be awesome. That's it. We're done. It's over.
Let's go.
Thank you.